Howdy. Welcome back to Dion Talk. A couple of weeks ago, Michael Zuber from One Rental at a Time and me were doing the Three Amigos, but with only the dynamic duo because Matt was taking care of his family. But we're all three here today. And both of them have been investing longer than me. Both of them have larger portfolios than me. I think they have a lot more experience than I do. And on their channels, they have talked to professionals who think that over the next year or two, interest rates on buying properties are going to go up, which will have different effects on real estate. It could cause prices to go up like it did in the 70s. It could cause transactions to go down. Some people say higher interest rates means lower prices. I don't see that. I don't think any of the three of us see that happening. I think supply and demand are going to dictate that, and wage inflation is going to be the biggest thing. Mm-hmm. But I have some ideas that would make the interest rates go down. So I've made a $1 wager with Mike, and I'll cast it out to Matt too, that by this time next year, in 2022, I think interest rates will be lower than they are now. And so the first thing I'd like to start with, and we'll start with Matt, can you think of anything that would cause interest rates to go down? And if not, what do you think will cause them to go up?
Well, so the upside is kind of easy. The upside is, inflation, the Fed having to stop tapering, cheap money disappearing, all of those things. And I think to have them, deflate and have those rates go down, I think that's also it's basically the Fed doing exactly the opposite, broadening their, not tapering when they said they were buying that much more, money being printed and, all these crazy things that they're doing to create this unnatural market. And I think that, rates going down, because of a 40-year mortgage. I mean, I think there's a number of different things that can get the rate down. And I think there's a number of things that can make it go up. And that's, largely that's what we're going to watch the Fed and watch the market and see what the market thinks.
Okay. And I'm sitting over here with a PhD, public high school diploma. That's the level of my education.
Copper.
And the School of Hard Knocks that both Matt and I go to. I'm sure Mike has gone through that too. But Mike, you have that education in finance, and you have decades worth of experience in not just real estate, but you did stocks too. Mm-hmm. What do you think can cause rates to go down? And what do you think can cause them to go up? And then I'll give you my opinion and you guys can tell me what you think.
Yeah. So again, this is something, I don't talk about a lot, but I actually am planning for kind of both environments right now. Because again, I think inflation or deflation are right around the corner. I think there's a lot of things so inflation is easier, right? There's $1 trillion, there's $5 trillion sent into the economy for folks. 1.3 is still there. Supply constraints, wage. I think we're in a wage spiral cycle. That will be kind of the thing that pushes everything else up. So that's kind of the inflation thing. I talk about that most on the daily financial news, but deflation really could happen. I think there's a couple of things, right? You could have a deflation in asset prices. You can have a deflation caused by technology. You could have deflation caused by a market accident, a true black swan event. And that's one of the reasons, again, that I am sitting on some cash, right? Because a deflation environment, again, in my world means a crash, a nasty crash. And I believe, again, I've said it, I believe there is a crash coming. It's a couple of years out. It's mainly in multifamily because the same sins of 06 and 07 are occurring today in the commercial market. It's why I won't play. It's why I won't have 5, 7, 10-year debt. So I see it. I think we could have deflation. I think where you're wrong is it won't be next year. Most people, when they think about inflation or deflationary cycles, they're too early. Kathy Wood included. Kathy Wood is out saying we're going to have deflation next year because of technology. I've sold, invented, created technology for the last 30 years. You won't even get through the early adopters next year. There's no chance, right? Everybody wants to talk about, no, we're not going to have any more employees at Burger King or McDonald's or Wendy's because robots are going to flip burgers and make French fries. Probably, but not next year, right? And then there's obviously a video with Ryan Pineda and Grant Cardone talking about deflation. I've watched that video. Thank you, Dion, for sharing with me. Frankly, I think he's talking his book in this case, right? If you are out overpaying for Class A apartments today, you are paying 3 caps for 4 caps. you are betting on deflation. You are hoping, praying for deflation. Otherwise, when it's time to refi, my friend, you are toast. You're going to have to come back to your LPs and ask for a lot of money because you are not going to have the equity. I did a video today with Jonathan Twomley about what happens if cap rates go up 1% or down 1%. It is shocking what happens to values. And I think if you're overpaying today, you hope for deflation because it's the only thing that will bail you out. So could deflation happen? Absolutely. I think it's again, our dollar bet. I don't think it happens next year, but I do see a deflationary cycle out on the horizon. It's just not next year.
Okay. I really like how you said have a plan for either.
Mm-hmm.
So I run a business. It's a truck driving school where I teach people how to find truck driving jobs. And I run a nonprofit that helps people find jobs. And a lot of people are always worried about the next election cycle. How we're going to have a blue state, a red state, a county, of whatever. And as a business owner, it is your job to have a plan, a strategy for either outcome. Like as a person, you can have an opinion, but as a business, you have to say, if it goes this way, this is what I'm going to do. And if it goes this way, this is what I'm going to do, and have your list. It's the same way in real estate. So I recognize that the experts you had on, and with your experience, you're more likely to be right than I am because I am a newer investor and I have some experience, but I see things like deflation happening because so many people don't understand why the federal government wants inflation. The federal government is close to $30 trillion in debt. And if we have a couple of points of inflation, it's easier for the government to pay off debt because that debt has less value. So the inflation is the government's friend. And
well,
as
hold on. So here's the idea. Very simply for everyone. If we have inflation, debtors win. Period. If we have deflation, cash holders win. It is that simple.
Right.
And that's why I'm sitting here in the middle. I've taken all of my debt structures. I own lots of assets. I can hold them through any deflationary cycle, and I have no interest rate risk. Inflation. Deflation. I've been stacking cash for the last couple of years going, I see some pain ahead, and I want to be able to strike when it happens. So again, if you are in debt, especially fixed rate debt or debt of any kind, you hope for, pray for inflation. If you are sitting on mountains of cash, you want to be the person, you want to be Warren Buffett, the person with all the money in the world who can stroke a check to Goldman Sachs at ridiculous terms because they need cash.
That's right.
So I'm trying to sit in between both those.
And that's why I like hanging out with guys like you, because you become the average of the 5 people you spend time with. And I am levered. I am using that leverage to pull out cash, based on a little bit of that peer pressure to be ready for both too. What we're going to see, the reason I see it happening next year and not longer is right now people have over $1 trillion in savings. Some of it's in equity in their house or assets. Some of it's actually money sitting in a bank account because we got locked down. There was extra unemployment, extended unemployment, stimulus. People were still working. People were working and got stimulus. So all this money was coming in, but we couldn't spend it because we couldn't travel.
Yes.
But people talk about us moving to a renter's nation. More people are renting than at any point in time. And because of being, work being transient and people changing where they live based on, the size of their family is more common now because kids can be homeschooled. You're going to work at home. You need an office. There's all of these reasons. But everybody thinks renter's nation applies to your house. We're at the point where we're renting cars. Uber and Lyft are everywhere. People are touring out their own car. People are renting RVs. Airbnb is a thing as much as long-term rentals are, and in some places it's more common. We used to, here's the dinosaurs in the room. We used to buy a CD to listen to music. Now you download it, you MP3 it. You're not listening to the radio to record anything. Nobody who listens to the actual radio anymore. You used to go to movie theaters because remember, money only has value when it moves.
Yes.
It has to have a current. That's why they call it currency. Correct. So if it's sitting in your bank and it's not moving, we're going to see deflation. Instead of going to the movies to pay to watch a movie and spending $20 on a couple cents of popcorn and $5 on a couple cents of soda, we're sitting at home, we're watching it on HBO Max, same day released in theaters. So massive amounts of money are not being spent. We're coming out with the metaverse. And so this is me being transparent. I'm a nerd. I've had pretty much every type of VR system there could be. A couple of years ago, it was $800 for an HTC Vive, and you needed a $2,000 gaming system. Then the PlayStation VR came out. The system itself was $400, and the PlayStation was $400. So you were down to $800. Now, Facebook came out with the Oculus Quest 2, which is $300 or $400. You don't need a computer, and it's going to connect us in ways where, literally, instead of going to a baseball game and paying tens of thousands of dollars for that one spot right behind home plate, you're going to be able to watch the game standing on the field for pennies. Any viewpoint that VR system can give you. We're going to see a massive deflationary period based on technology. So I kind of agree with the expert you brought up. People are going to spend less money and have a better experience. We might not be there in person. So there's not going to be the inflation that the government needs to motivate people to invest. I see this time next year rates being lower, but I'm planning for both. Like you said, got the debt, got the cash.
Yeah, you're well prepared. Again, I think all of the thing you've done is the only wrinkle that I see different is timing. Having sold revolutionary technology, there's early adopters, your word, nerds, that will get into that. Then there are people like me that have never had any of those systems. I don't even know what the hell you're talking about, right?
That was why I went into so much detail, because I figured I was the only one here who knew it.
Yeah. So again, I think that all that is coming. But see, another thing that will happen is what will happen around it. Yes. Right. So first off, all that's cool. No chance that goes mainstream next year. Zero. But then you'll see other add-ons, right? Again, you're sitting on the field. Well, how would you like to sit next to so-and-so and pay for your, sit next to, I don't know, pick some famous person, dead or alive. Well, we'll put them next to you. And do you want to stand out and have this special jersey and all these other widgets? They'll find a way to monetize the hell out of that thing. And it's coming. We'll be trading crypto or currencies or coins or wheat or flour or shells or whatever it is in the metaverse. Believe me, they'll find a way to get the money moving. Deflation is real, technology especially. But I've been doing this a long time and know lots of very smart engineers, computer scientists. It's not next year, but it's coming. It's just not next year.
Fair enough. That's why it's worth betting $1 on.
Yeah, I got
all three of us being ready for either outcome.
Yeah, I think that's important, right? Again, we are all sitting here talking about things that may or may not happen. However, we have positioned our personal portfolios to take care of inflation. We all have fixed rate debt. And if we have fixed rate debt, our assets go up, our rents go up, our NOI or cash flow goes up. We've also all have recently, yourself now doing it, gone back to our piles of asset and said, hey, where can I peel off a little bit of cash just in case? Because again, believe me, I would love for deflation to happen next year.
Oh yeah.
Again, I see it happening 2 or 3 years out. If it happened next year, it just happened early. And I will go gobble up assets just like I did in 2010. It's okay.
Right. That's right. I think that's what JP Morgan's doing. That's what Warren Buffett's doing. That's what all these guys are doing.
Yeah, but JP Morgan, $500 billion now, it's $1 trillion of cash just sitting there. You want to know why the reverse repo market has 1.3 trillion in cash and that M2 money supply is not moving? Is people are waiting for a flip and sale. That's what's going on.
Yep, totally agree.
Okay, well, there you have it. 2 experts' opinions and my guess. Matt, if people have questions and they want to reach out to you, how can they find you?
Lumberjack Landlord on YouTube and 11:30 a.m. Eastern Time live stream every Sunday.
Awesome. And Mike, how can they find you?
One rental at a time, website, YouTube, book, all that good stuff. And unfortunately, only 1 hour Saturday morning at 8 a.m. Pacific.
Unless they join your course, then they get you for a second hour.
That's right. I go back to back Saturday live streams.
Awesome. Thank you both. Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.